All right, so again, I am Professor Perfetti. This is BMGT 443 Equity Analysis. Uh, Basically, this class, which runs on Monday and Wednesday, is going to be teaching you this semester how to do sell-side equity research and think like a real-world analyst. So we're going to be covering topics such as valuation. Sorry, I was trying to figure out where the remote for the projector went. We're going to be talking about how to write those buy, sell, hold opinions, select individual stocks, etc. And so that's really what this class focuses on. I will mention that this class is probably the most real world of any of the classes you've taken at Smith, and that is by design and intentional. So it really is kind of a more accumulation of all the things you've done in the past, and we deal in the real world. This is not about Harvard Business School case studies. We pick an idealized example and talk about that of what happened 10 years ago. This is actually going to be messy. Matter of fact, sometimes it's not going to be straightforward, and the answers will not be self-obvious, and that's what I like. It's kind of really digging into the nitty-gritty, and that's what this class is going to be about. So I also want to let you know that I'm a lecturer, not a full-time faculty member, which means I don't do research. I live in the real world. And so I actually have a real job outside of this. And so what I do will bleed into my real job, and that actually has Jerry Maguire-like benefits for you. Help me help you. And I'll give you an example of this. So last semester, I was working with a company called PVH. Anybody know who PVH is? You're nodding your head. Who's PVH?
Clothing retail.
Yeah, so what are some of their brands? Calvin Klein, Tommy Hilfiger, Izod, Speedo, etc. So big brand company. And one of the things that Calvin Klein is trying to do is they're getting back in the jeans business called denim in a big way. And so one of their heads of global supply chain, Matthew Wallace, I was doing some work with, and I was like, hey, my class is doing some equity research. Would it be interesting to you to listen to them talk about the athleisure industry? So the group project was the athleisure industry, and they did projects on Lululemon and Nike and Puma, and they actually presented their group projects to Matthew, and he loved it. Matter of fact, they actually submitted their research reports, and he actually used some of the data from the students. And I hope they didn't make shit up. That would be very bad for us. But in all seriousness, so that's the point. Like I try and bring some of the real world stuff that I'm working on into the classroom, and to some degree give you access to some of the things that you otherwise wouldn't see. Right? So again, could be an interesting class, but I'll just set up a couple principles before I go through the syllabus. So number one, you're going to get into this class what you put out of it. So I know many of you are second semester seniors. You just can't wait to get to your job. This is a placeholder. You got to get through it. If you need to put a minimum amount of work to get by, I understand. It's your money. You can decide what you want to do. But you can also get a lot out of this class. Because like I said, there's going to be a lot of effort that needs to be put in. And it's not just a check the box class. So you actually have to kind of do some things to really get a lot out of it. But you're going to get a chance to see some pro stuff that you otherwise wouldn't have seen in an undergrad. So take advantage of that. Number two, I'm going to treat you like an adult this semester. And that's going to apply to grading and other things. And somehow people forget about this as we go into the semester, because I know that grades are critical in this semester, but there's a couple of rules that are going to be very important. So number one, the grading that myself and the two TAs that are assisting me with most of the grading in this class, by the way, the TAs I got exceptions for because we used to have MBA students to do the class, and the MBA students were worthless, right? Because they didn't know Bloomberg and they didn't know the real world. Okay, and that was a problem for me in using them with this class. So we actually have the TAs for this class have taken the class before. Okay, so both Kush and Michael were students in your shoes not too long ago doing the same assignments and the same type of group project work. So, and they did well. So that's the point. The TAs are here to help you. But I just want to talk about the grading. So here's what I mean. Like one of the things I want is with grading is repeatable grading. Like, I don't want to grade you any differently than I would grade any of the other 165 students. And I want it to be transparent. So if somebody else were to look at that and say, I would grade you the same way every single time, and I would grade you no differently than I would grade her, I would always grade you the same way. And that's just something that I think is very fair. I want to be treated the same way. But people understand that there's consequences to this. So as an example, for the semester, another general principle, I will generally be flexible before deadlines, but we will not be flexible after deadlines. So if you're late, you get a 0 on the assignment. That's it. It's non-negotiable. Now, you will not have assignments that are due in 30 minutes. You'll have probably the fastest assignment you'll ever have is like 3 days, okay, or 5 days. So being 10 minutes late for something that you had 5 days to do in this class is not acceptable. It's no different than in the real world. And I don't care if you wrote 2,000 words over 5 days and you were 30 minutes late and you think I'm the most unfair professor in the world for giving you no credit because you wrote a bunch of words, but it was after the deadline. Because the point is, in your assignment where I didn't give you credit, somebody else who had their car broken down and couldn't get to the internet and submit their thing and got a 0, I can't tell them they're not getting credit if I'm telling you that you're getting credit. So that's what I'm saying. So unless you have a university approved absence, if you turn something in late in this class, you're not going to get credit. And that's just the way the class has to be done. So I'm just being very transparent with you up front that I'm going to treat you like an adult. So if you have a problem, reach out and ask. Let us know. So for example, in the class earlier today, somebody said, look, I'm going to have surgery the day of midterm 1. I'm now worried about that given what you just said. And I said, okay, before the deadline, we're going to be flexible. What can we do? How do we make an accommodation? By the way, around that surgery, how long is your recovery? Do you need additional assistance with some of these other assignments? Let's work this out. So again, before deadlines, myself and the TAs can grant you exceptions as well. We will be flexible. After deadlines, we're not going to be flexible. And just setting up the ground rules for the semester. Same thing, transparently grading. We're going to grade you consistently throughout the semester. If there are requirements and you don't submit them, like last semester, team assignment. One person responsible for submitting on behalf of the team did not submit. The entire team got a 0. Right? So I got 7 angry students who were pissed off because one of their team members didn't do it. And basically they said, why can't we have credit for it? And the answer is, because you're a team. And the team gets the team grade, so it's the team's responsibility, even if one person failed. Again, I feel badly for you, but I'm just letting you know up front that there are some rules, so you're going to be treated like an adult this semester, and I'm just saying those are the things that happen in the real world. Deadlines are not going to be negotiable. Now here's the flip side. I'll go to attendance policy. You pay a lot of money to come to this school. I'm not going to hold a gun to your head and force you to sit in this classroom for the next 14 weeks. You come here because you want to come here and learn. You don't have to be here, with 3 exceptions. There are 3 classes that you cannot miss this semester. Other than that, it's up to you, okay? Matter of fact, I will record, as I'm doing right now, YouTube videos. So you can actually watch the whole class virtually. I don't think you're going to get as much out of it. You're probably not going to have your questions answered, but technically you're not going to miss a lot, even if you're not here, because I'm going to try and record at least one of the sections every week. I used to record when I'd miss a class, but then people actually started asking me to record even when I was at the class. So I just record every class. So you'll see there's a YouTube channel which you'll have access to watch the recording. So that will be available to you. But there are 3 classes you can't miss, and this is non-negotiable. Class number 1 is Monday, February 25th. So one of the things about this class is you are going to be certified in Bloomberg Professional. Is everybody here currently certified in Bloomberg? Okay, 1 person, great. By 2.5 weeks from now, all of you will be certified in Bloomberg Professional. It is the pro software used by the financial services community. It's the actual software you'd use if you work on Wall Street. It's very expensive software. It costs $25,000 per user per year, minimum 2-year license. And that's just the base model. Prices go up from there. All right, you get the cost of 0. It's free for you. Now, here's what's interesting. The University of Maryland, College Park, is the #1 user of Bloomberg Professional in the world for higher education. There is no school anywhere else in the world that spends more on Bloomberg than we do. We have 60 terminals at this school. 32 of them are in this lab. There is no other lab in the world like this with 32 terminals that students outside of Bloomberg's own campus, where students can actually take a class on Bloomberg. Wharton, where I went to school and still do some teaching in exec ed, basically they have 8 terminals for the entire Wharton Business School, 2 shared terminals for the MBA students out in a hallway. Okay, you have 32 in the lab. So it's a privilege of what the school gives to you. Because we're such heavy users of Bloomberg, the Bloomberg team is going to be here to train you, advanced training on the software tool that day. You're going to be here for that training. That team also is the team responsible for undergraduate recruiting for Bloomberg. That night, they're going to be hosting an event. You don't have to go to the event, but if you're interested in working in Bloomberg, those are good people to know because those are the people that actually make the hiring decisions. We have had at least one person from this class hired every semester going back as far as I can remember. So they'll probably bring a couple of my past students to talk to you about the experience. But that's the point. Like, one of the reasons why Alex Trianis, our dean, I'll give him credit for, he used to be head of the finance department, invests so much in Bloomberg, is it actually put us on the map with Wall Street. Because Bloomberg didn't used to recruit here. A lot of Wall Street firms don't come here. And so we're trying to change the dynamic. But it goes back to you, like, if you put some effort in, we're trying to put some effort in, we'll make something better, but we're going to give you access. So you're going to be here when we have guest speakers. The other 2 days that matter are May 6th and May 8th. Those are the final 2 days of the class where we'll be doing group project presentations. So about halfway through the semester, you're going to be divided into teams. You're going to be given an industry. So, for example, last year they had athleisure, one of the classes. So you might take Calvin Klein or PVH. Another team might have done Lululemon, Nike, Adidas, Puma. Everybody will present that on those 2 days. So they'll be given the class size, about 7 teams per section. So 3 or 4 of you will present on Monday, May 6th. The other 3 or 4 will present on Monday or Wednesday, May 8th. You will be here for both days, regardless of whether you're presenting, your entire team. So those are the 3 non-negotiable days. Other than that, you guys can decide, whether you think it's important for you to attend the classes. Now, let's come back. Go over a few more things. So at the very beginning, this is my email. That's my cell phone. That is the office they gave me upstairs in the finance lab, or finance department. I'm hardly ever there. Usually you're going to find the TAs there for office hours, only because this is actually my part-time job. Like, I do this stuff in the real world. Like, tomorrow I'm working with Merck. Thursday I'm working with a company I can't actually disclose, but like, basically I'm in the real world. So usually I'm not on campus except when I'm teaching this class. So back to this. So basically, the TAs are your other source of getting information. Now this is section 301, I believe. Yes, so Michael is your TA. So he's going to be your primary source of information, and for grading, that's his email address. And they're going to have office hours generally every Thursday between 12 and 4:15, and they'll be in 4456 Fan Munching Hall. Classes will be recorded on YouTube, so that's where you'll find them. There'll be links to the YouTube videos available through Elms. So every time, so I'll put a link after we've recorded this class on Elms. You'll see general links to all the YouTube classes if you need those as reference. For textbooks, there's one book you need. It's the 6th edition, the valuation book. Don't buy a non-6th edition because they were completely changed in the 6th edition. That's the version that you need. That's the ISBN number if you want to get it off of Amazon, and the bookstore has it. And I actually heard the library has a bunch of copies which you can actually rent out for free for the semester, first come, first serve. So essentially, you will need that book. And the way, again, back to adults, I don't cover the readings in class. I've assumed you've done the readings. So if you have questions about it, ask. Otherwise, I'm going to assume you kind of paid attention to the material and that you have come prepared. Almost half of your grade is going to be on group projects. So by next Wednesday, you will be in a team of 5 to 7 people. No less than 5, no more than 7. Okay? And the teams will be graded as a group grade. Okay? So everybody gets the same grade, subject to peer review. Okay? So if you don't participate in the team's project, then you'll be excluded from the group grade if the team lets us know. But otherwise, everybody gets a team grade. So make sure that I'm going to give you a choice to either, if you want to form a team, you can start reaching out to some of your friends and create a team of no less than 5 or more than 7. But next Wednesday, I'm assigning everybody to a team. So whether you are in a team at that point or not, by the end of that class, you will be on a team. Okay, so the teams will be created next Wednesday. And the first team project starts next Wednesday, which is the Bloomberg Trading Challenge, which to me is the most fun part of the class, and it's the most loved, and it's the most hated, okay? And it's hated because of this thing called grading, okay? And the way it works is that you're gonna start with a hypothetical portfolio of $1 million and 90 days, and through Bloomberg, you're gonna trade equities. You're either gonna buy or sell short. And you're going to be scored based on absolute performance against the other teams in your section, right? Whoever has the highest portfolio value halfway through the semester, and that date is on the syllabus, March 13th. At the end of the day, March 13th, whoever has the highest portfolio value gets an A, whoever has the lowest portfolio value gets an F, and it's a pure distribution, relative performance. I don't care whether you make 30%, if everybody else makes 35%, you still get an F, okay? And that's 5% of your semester grade. Now, we're gonna run it again for the second half of the semester, and that's another 5% of your semester grade. So 10% of your grade is the stock simulation, which is how you do in real world investing compared to your peers. And it's cumulative. So on March 13th, if you're in a hole, you stay in that hole for the second half of the semester. It doesn't reset to zero. So just remember that as you're doing your trading. Now, again, outside of the grading aspect of it, people really get engaged, and this is your chance to make this class, so I mean, very real world. And this is actually the one real world part that's not real, because if you had actually worked for like BlackRock and you finished consistent in the last place, you get fired. So here, it's only like 10% of your grade is enough. I don't consider that to be that bad. But in any event, in the student world, I know it feels very bad. So I will tell you that there is extra credit potential in the class. So even if you don't do well in Bloomberg, there is extra credit that can mitigate some of the poor performance so it doesn't completely hurt your grade. And again, it's only 10% of your grade. But let's go back. So in the Bloomberg trading competition, I had to make a couple of changes to the rules this semester versus last semester, because I don't remember paying attention to what happened to the stock market last year, but it was awful. So to put it in perspective, the winning teams in most of the sections last year lost money. So you actually did well by losing less money than everyone else. And it got so depressing that by November, teams were literally just keeping their money in cash, because whatever they bought was just falling. Because you just couldn't go back to, oh yeah, just buy Apple. They always go up. Apple was down 30% last year. All right. Oh yeah, just go buy Amazon. Amazon was collapsing. Like the old tried and true FANG didn't work anymore, and people didn't know what to do. So again, very real world, they were just hoarding cash. So this semester, don't care how bad it is, you cannot hoard cash. So a couple additional rules to the trading competition. Number one, within 5 days or 1 week of starting the trading competition, at least 70% of your balance, 700,000, has to be in equities. And it has to stay 70% or more invested throughout the semester. So you can't just sit on the sidelines in a bunch of cash. And you have to be diversified. You can't just put all your eggs into one company. You have to own at least a minimum of 5 companies. And you got to trade, which means minimum 10 trades each half of the semester. Okay? So you can't just buy and hold over a 90-day period of time. You do have to do some active trading. So again, it's really the way to kind of get you engaged in the real world, but that's the first group project. Questions about that? We'll get more into this next week. All right. Obviously, in order to do that, you're going to need to know how to use Bloomberg, and you'll have to become certified, which we're going to talk about that in a few minutes. So I know you guys care about grading. That's why I spent so much time talking about it here up front. So let me just talk to you about grading in this class. There's 100 potential points available currently for the semester. The individual grade at any assignment doesn't matter per se. What matters is you're trying to accumulate points throughout the semester. To get an A in this class, you need 93 total points. To get an A minus in this class, you need 90 total points. To get a B plus, you need 87 total points. And right now, there's 100 points in that universe. Now, generally, I'll add 4 to 6 more points of extra credit. It's kind of like the class curve. As we get later in the semester, I'll decide how many to add. Okay? So here's where ELMS will fail you, because ELMS is not set up to do what I do. So when I add 5 points of extra credit, then, and let's say you have 90, ELMS will take 90 and divide by 105 and show you a grade. But that's not your grade. Your grade is 90 points, is an A minus. So even if I make the point universe 105, 90 points is still an A minus in this class. So you're trying to get to that point level regardless of how many extra credit points I throw in there. So that actually benefits you, but nonetheless, it will get a little misleading later in the semester where it actually looks like you're doing worse than you actually are. Okay, so how is the distribution currently set up? 5 of the points is Bloomberg certification. You just have to be Bloomberg certified. Okay, that's easy. 15 points will be 3 group projects about once a month, where each of your team will do a week-long group mini project. Okay, 25% will be homework and in-class assignments. There'll be 11 homework assignments throughout the semester. They're coming at about 1 a week. So just assuming you're doing at least 1 assignment a week when there's not an exam. And then there'll be 2 midterms, each worth 5%. Key to the midterm is you have to take it for the section that you're registered for. So I know there's a little bit of a wait list, and I know some sections are more popular than others. So the same content is being taught 4 times throughout the day. So if you need to go to another section, you can do it with 2 caveats. Number 1, there's 32 Bloomberg terminals and about 42 to 43 students registered per section. That means there's not enough students per terminal. So if you go to another section, the students in that section get priority to the terminals. They just have to, okay? And number 2, when you take an exam, you have to take an exam during the class that you're registered for's time, and the group that you're in has to be based on the group based on the class that you're registered for with the registrar. So other than that, you can surf sections if you need to, but nonetheless, subject to those caveats. Okay? All right. The final thing will be 20% is that group valuation project, which you'll get halfway through the semester, work on an individual company. And then 15% will be the final exam, which will be given in class on the last day of class. Generally for attendance, outside of the mandatory attendance, basically just, I would like to see you here, but if you need to miss, you're adults, just keep up. And for the final exam, I am trying something new this year. So this hasn't been done previously, but it's been done this year. And it relates to the honor code. So basically, follow the honor code. All right. Every semester, I had to send people to the honor council, and it sucks. I really don't like to do it because when you get convicted, your parents blame me. They never blame you. They blame me for destroying your life for the stupid stuff that you did. So I'm just asking for your help. Don't do stupid stuff. This class is not that hard. The most difficult mathematical thing you'll have to do is algebra. There's no calculus here. Like the math isn't that hard. All right, you're working a lot in teams to begin with. There's no necessity to really cheat. All right, and it just reflects badly on you and everybody else. And if you're caught, you will be sent. And unfortunately, there are consequences. And really, where I had to change it was the final exam, because the final exam was a take-home exam. And basically, we on the honor code, you take it outside of class, not collaboration. Well, students got caught taking it as a group. Okay, and again, I'm not saying that these things don't happen, but unfortunately, they do. So here's the thing. Now, I'm not going to be able to give you a take-home exam anymore, and I have to watch you take a friggin' exam. I have to tell you, it's like watching paint dry. I don't really want to do this, but unfortunately, that's where we are. So the final exam will be Monday, May 13th in class. That's another date, can't miss. It's not going to be the exam based on the exam period, because I'm not getting up Saturday at an 8 a.m. at some ungodly hour to watch you take it. So if I have to do this, we're doing it the last day of class. So the last day of class is the exam. You'll take it during the class time that you're registered for, with me watching you to make sure you're not cheating or collaborating in any way. So here's the other carrot I'm throwing out here to you. I'm calling it the final exam opt-out. What do I mean by that? Basically, for the final exam, if you do all of your assignments on time and you get a minimum grade on every assignment, you don't have to take the final exam and you just get 15 points. Okay? If you are late on one of those assignments, you lose this opportunity. This is what I mean by treating you like an adult. So when we're having this conversation in 3 weeks and you're complaining to me that I've been a great student and I was 15 minutes late in the assignment, how could you take the opportunity away from you? I'm letting you know I'm going to take the opportunity away from you. Okay? So again, if you do everything that you're supposed to do with the assignments on time and get a minimum grade on the assignments, which is not going to be an unreasonable minimum grade, you don't have to take the final exam, you get 15 points. To be honest with you, if you all do that, I will be thrilled. We won't have to have a final exam. And more importantly, you'd have learned a lot. Okay? Because here's the key. This class is cumulative. By definition, the way it works, it's cumulative. Every week builds on the previous week. So if you're following along, you're not going to get to the end of the semester unless you knew what was going on. So that's the point. I don't, at that point, need a final exam to figure out if you know what's going on. I'll see it in your group projects. So I know we're supposed to have final exams, but to be honest with you, we don't really need one in this class to assure that you did it. So that's the point. Do the assignments. You can opt out of the final exam, get an easy 15 points. We're going to see how that goes. Questions about that? Okay, you guys are an easy group. So the other thing, though, that's new about the honor code, so don't do anything stupid relative to the honor code. So no plagiarism, no collaboration where there's no collaboration allowed, no copying other people's assignments. And here's what's new to the university this year. I don't know if you've seen it with your other professors. We're all supposed to be implementing it. But starting this semester, Smith is banning course help sites. So you're no longer allowed to buy or get information from sites like Course Hero and their ilk. Any use of that is an automatic honor code violation. And you also are not allowed to buy or get exams or previous submitted homework assignments from past students. So those two things no longer are allowed at Smith. We're asked to implement that. I'm implementing that in this class as well. So again, do the work as it's given to you this semester. All right, late assignment policy. Generally exams, you got to finish the exam time. But for the group projects and the homeworks, there's a 15-minute grace period associated with every assignment. So generally, homework assignments will be due Monday at 10 a.m. for all sections. So you'll have technically until 10:15 to submit it, okay? So you shouldn't think about 10:15, but you have until 10:15. If you submit at 10:16, it won't let you because the link will disappear in ELMS. And at that point, you're getting a 0. And it doesn't matter how many words you wrote, you still get a 0, okay? So very important, don't miss the grace period. Now, I know the real world will intervene. If it's a university-approved thing, hey, I was in a car accident, I was in the hospital, whatever, we're going to be very understanding. That's a legitimate university-approved accident, right? Now, if you have a browser crash, which is very possible because ELMS is not the most stable product in the world, then here's the thing. Timing matters. So if it's 10:14 and you're submitting your assignment and your browser crashes, I would expect an email timestamp 10:16, maybe timestamp 10:17 with the attachment. Professor Perfetti, my browser crashed. Here's my assignment. I'm really apologetic. We'll probably grant that as an exception. If you send it to me at 2 p.m. that day, I'm not going to give you any credit. So if exceptions have to occur, they're going to have to be looked at under the lens of reasonableness, noting that we don't give extensions that are not pre-approved. Okay. So again, dog ate my homework right before, emails at 10:12 that the dog ate your homework. Okay. And then we'll talk about how to get the homework out of the dog. But don't email me at 10:20 that the dog ate your homework and needed an assignment. Okay. So again, deadlines matter, timestamps matter, written matters more than verbal. Okay. And that's what we'll look to in the repeatable stuff. If you have any special needs, please let me know. And generally, this is an overview of the weeks. So today was really an overview of the syllabus and intro to a couple concepts. First lecture note is going to be on Wednesday. So again, chance to get the book, start doing some of the readings. And next week is going to focus on EIC, economic and industry analysis, how that applies to valuation. Next Wednesday, we will form teams. And the Bloomberg Sim trading competition starts next Wednesday. Okay. The following week, you'll be working on group case 1, and we'll have a lecture on the 11th. And February 13th, I'm going to give you class time with no lecture to work on your Bloomberg certification, which we'll talk about in a few minutes. But it will take 4 hours using an actual Bloomberg terminal. It's just math. We have 32 terminals. At any point in time, 5 or 6 don't work because of hardware problems. I got in a fight with IT a couple years ago because I was arguing that these machines were 6 years old, and they said, no, they're only 5 years old. And I said, well, I don't care how old they are. They don't work. So we have some of the world's most expensive software on some of the cheapest, crappiest, most prone to die PCs. It makes no sense once you get outside of university. University makes complete sense. Like today, that machine has a dead mouse that he's sitting at. So you got a $25,000 piece of software that is useless because it has a dead mouse. Okay? And I'm just telling you, at any point in time, 5 to 6 of these will not be working. So I'm going to request your help that any day before you leave, identify any problems. Write it down on a piece of paper, put it on the machine. I will collect these by the end of the day, walk across to ITE, hand them a list. Hopefully by the next class, they will get to them so we can keep putting Band-Aids to keep the really expensive software working. Okay? So in all seriousness, that's going to be very important because we need as many of these as possible. But just math, it will take you 3 to 4 hours to get certified, to do the certification. You only have 90 minutes class time. There's only 32 machines in this room across 160 odd students. So you're going to have to spend more than class time to do it, but I'm at least giving you some class time to work on it. So that's Wednesday, February 13th. You will be Bloomberg certified and submit your certification by February 15th at 5 p.m. That's your deadline, okay, with a 15-minute grace period. Now, I'll talk more about that in a minute. So next week after that, and this is going to be the hardest content week of the semester, is reorganizing the financial statements. It's a process McKinsey uses that you're going to learn on Modigliani-Miller reorganized financial statements, which are key to analytics and valuation. So it's foreign to you, but we're going to teach you how to do it, kind of core concept for the class. After that, the following week, Bloomberg's going to show up on that Monday. They're going to give you some advanced terminal training. And again, they're also turning into a recruiting event. Right after that is the first midterm. Midterm 1 is on March 4th, which you'll take during class time. So in this case, we're at the 2 o'clock section, so you'll take it between 2 and 3:30, right? So you have to take it for the class you're registered for. And that's when we'll start building the valuation model. If you don't know Excel, by the end of the semester, you will know Excel, okay? Because you're going to spend about 3 weeks individually building with me a big Excel DCF model. It will take us 3 weeks to do the model for company number 1. It will take you 10 minutes to use the model in company number 2. So we're building a reusable model tied to Bloomberg, which is going to be key for the group projects and the valuations you do. And by the way, it's real world. Versions of this model are being used by the Senbit Fund. Versions of this model are being used, heck, by the analysts that are now working at Wall Street that took this class. They call back and say, Professor Perfetti, can I have your latest model? So basically, it's a very real model. And so you're going to learn how to build a real valuation model tied to Bloomberg in this class. And again, it should be a great exercise. But we'll be doing that right before and after spring break. The goal is we'll pick one company, maybe somebody like an Apple, and try and figure out why their stock price is appropriate, come up with our buy, sell, hold, bull, bear case, and then that will lead to midterm 2 on Wednesday, April 3rd. Talk about multiples. And then here, just kind of very vague on the agenda, or the syllabus for about here. Basically, after we build the model, there's really no more content that you need to be taught in the class. It's all real application. So the following few weeks are while you're simultaneously working on your group project, it'll pretty much be a rip from the headline homework assignment. So the way homework assignments are going to work is I'm going to basically go to the Wall Street Journal. I'm going to refresh. And then we're going to see, hey, Caterpillar's profit outlook dims as China slows. Value Caterpillar. Okay, give me the buy, sell, hold on Caterpillar with the bull bear and help me understand what the impact of China really is. Is it oversold? Is it appropriately priced? Like, that's going to be a homework assignment, hypothetically, if we were doing this later. So again, I don't know what the homework assignment's going to be because they will be real as to whatever is happening in the real world. Okay, and so again, that's the fun part in my mind semester, because once you get to this, you're actually really applying it to real world companies. Okay, all right, and then basically week of the 6th, you do your group projects, final exam the 13th, and then I guess about 3/4 of you graduate after that. So other than that, we'll be done. Questions? All right, let's talk about Bloomberg. So on your desktop, is an icon that looks like this. And this icon, if you click on it, is Bloomberg. So Bloomberg is actually software. It used to be hardware, now it's actually purely software. You can actually go to Bloomberg.com and download the software to any computer. It's Windows-based. But with one caveat. When you launch the software, it's going to ask you for a serial number. which you won't have. And when you call Bloomberg to get the serial number, they're going to ask you for $25,000, okay, which you probably don't have. So basically, you won't be able to use the software unless it's on a machine that's been authorized to use it, which are the machines in this lab. So practically for you, there are two labs. This lab in 3505 is actually an open secret because a lot of people don't know this lab exists. And when we're not teaching this class, it's pretty empty, okay? And don't tell your friends about it because we like it that way. So that way you can do your assignments unimpeded. Because the other lab that has a lot of terminals is on the first floor. And if you've been in there, good luck trying to get to a Bloomberg terminal because the PhD students camp out there all day long and refuse to leave working on their dissertations. And they grab all the data. So what I'm just telling you is you can use the lab downstairs, but this is your better option. All right? This lab is supposed to be open 7 days a week. Okay? I say supposed to be because IT has interns, and interns don't always show up. But assuming they show up, you can get to the lab on weekends. Now, the reason why is because people have actually stolen, not the cheap PCs, but they've stolen the monitors and the keyboards. They leave the PCs, but they've actually taken the monitors and the keyboards. Why? I don't know. I don't think these are the nicest keyboards. Like my keyboard at home, I'd rather is a Logitech keyboard, which I like more than this Bloomberg keyboard. But the point is, you can get a Bloomberg keyboard. So they lock the doors after business hours. So technically, you can use the lab after 6 o'clock, but they auto-lock to prevent people from walking out with the keyboards and the monitors. So again, you can check the schedule with IT, but you'll need an account. So here's the way it works. Enter is the go key, or go is the enter key. When you get the main screen, hit go. Choose your language. If you're not an English speaker, non-native, you can use a different language. And if you, right now, you shouldn't have a login and a password. So down here, create a new login. If you create a login on a Maryland registered serial number, it just automatically gives you a free account. So as a Maryland student, your cost to use the software is 0. And so long as you log in once every 30 days, you can keep the account as long as you want. And if it goes inactive, you can reactivate it by just calling them. And again, cost to use 0 so long as you use one of the computers that's at the school and they know which computers are at the school. If you run into a terminal in this room and it says missing serial number, if IT wipes out these machines, which they'll do from time to time to kind of antivirus them to give them a clean image, it will lose the serial number that's installed. And then IT will have to reinstall the serial number. So again, alert me to that because that will also effectively shut down one of these terminals if they get their serial number wiped out because the IT is doing some cleaning. All right. So long story short, when you get the new user account on a terminal, create an account for yourself. You've not used it before. Next, type in your name, choose a login. This is like the Gmail logins where people have taken the easy ones. So you got to get like some weird combination of letters and numbers. Yes?
So if I made one at the beginning of last semester, will that still carry over?
You can try and see if you can recover it. Yes. Did you actually use it at all?
Barely.
Then start again. Clean slate.
Well, I can use the same email?
Yeah, you should be able to. Or it might ask you to recover.
Okay.
Either way. But the point is, type in your name, pick a login, try and find a unique one. Type in your real phone number, any email address is tied to you. It doesn't have to be a umd.edu address. Because here's what's going to happen. On the next screen, it's going to send like an 8-digit confirmation code as a text message or an email. You're then going to type in that confirmation code, and then it's going to create the account and give you a temporary password, which you can either accept or change, and that's it. Then you have a Bloomberg account. And then from then on, just use that account to keep logging in. Everyone needs an individual account. So we're not sharing accounts here. You have individual accounts this semester for assignments. Okay? So even today, start the process. Again, it should take about 3 minutes per student. While you're doing that, I'm going to go ahead and log in. You will not see this step on your terminal because I actually have on this one laptop what's called Bloomberg Anywhere, under our license, we're not allowed to take these computers outside the university buildings, with the exception of my laptop, because I'm teaching the class and I'm never here. So in order to do assignments and grade you and other things outside the class, I'm allowed to take the Bloomberg software off campus. However, I can't log into it without a fingerprint. It prevents me from letting other people that are non-Maryland people use the computer when I'm away. So you won't have this problem. I mean, it's an opportunity, I guess I could say it, but still a little annoying to have to use your fingerprint every time you log in. But the point is, you won't see that step. All right, so once you log in, and as I said, you're going to get certification on how to use Bloomberg. And Bloomberg is going to come here and do more training on this, but you'll come to a screen that looks something like this. And for certification, you'll type in BMC, which stands for Bloomberg Market Concepts. And then hit enter, or you can select it off the menu, because they have these series of 2, 3, and 4-digit codes that bring you to different parts of the software. There's about 33,000 screens in Bloomberg. The average power user knows 20. I always look forward to when Bloomberg shows up because I learn new things every time they're here, right? And by the way, there's things on here that are valuable that we don't even use. I'll give you an example. POP. POP is people search. This is a database of every Bloomberg user. So for example, who am I looking for? I am looking for people that are Maryland grads that work on Wall Street. So if I'm looking for a job, I can actually look at every Smith grad that's working on Wall Street and actually reach out to them in Bloomberg. And so as I'm saying, like, there's some very useful features of the software. They're not even related to this class that might be valuable to you even in the recruiting world. Okay, so again, more on this later, but let's go back to the certification. BMC. So this is a little tricky, but to do BMC, there's a login within a login. So you have a login to get into what's called the terminal, Bloomberg Professional, and then there's a separate account, sub-account, that logs you into the certification for the terminal. So you're actually going to have 2 accounts in Bloomberg, the master account to get in the software, and a second account with a complete different username and password to just get the certification. Saw a question over there?
Yeah. If you've already completed this, do you have to do it again?
Yes, you do. They've updated the certification, so I want everybody current. So here's the thing. When you create your account and you do the certification, Bloomberg defines the certification as completing these 4 sections. There's a section on economic indicators, there's a section on currencies, there's a section on fixed income, and there's a section on equities. There's a series of videos and readings and multiple choice questions you have to go through to basically become certified in each one of those sections. Now, to become Bloomberg certified, you have to complete all 4 of those sections. It takes about 10 hours. You can probably do it in about 6 or 7. But nonetheless, and you got to answer all the multiple choice questions, enough correct to be certified. They will give you a PDF and the ability to put on your resume. And it differentiates you from a lot of other students because you work in financial services. You'll eventually become certified and you have a leg up, right? So again, I would also say, don't put that you're certified unless you've done this, because when you're in an interview with me and you say you're certified and I say, what does EE stand for? And you have no idea what I'm talking about, they're going to quickly realize you weren't certified. So that's what I'm saying, like, do the certification before you actually say that you've been certified. Now here's the thing, that's the Bloomberg certification. For this class, obviously we're not covering currencies and we're not covering fixed income. So you don't have to do those 2 modules. So to become certified for this class, you only need to do economic and equities. But you won't be able to say on your resume that you're Bloomberg certified. So my recommendation, do all 4. Like if you're going to do it, you might as well do it, get the certification. Can't hurt. But you don't have to do technically the other 2. You're only doing for this class economic and equities. And, this is an and, you must get 70% of the multiple choice questions right in each of those sections. Bloomberg has a lower standard. So you need 70% or greater in economic and equities to become certified in this class. To prove to me that you did this, you're going to send a screenshot. Because once you complete this and you go back to the screen, it'll tell you your percentage by section. And so basically, take the screenshot that shows greater than 70 for those two sections. Now here's the thing. They will only let you take the certification test one time. If you take it, you get 68, you failed, you lost 5% of your semester grade, can't take it again. Okay? So, what do? What I found out from Bloomberg is they won't let you take a certification again, so you have to create account number 2. And so you can create accounts as many times as necessary until you create more than 70%. So you'll notice that when you hit sign up to actually start the certification, it will say, are you taking BMC as a part of a group? And did the professor give you a group code? I no longer use the group code they gave me because what the group code allows me to do is to see all of your scores in the back end. But since people take it multiple times under multiple accounts, I have no idea to figure out who's who and did what. So that no longer matters. So I don't worry about the group code. Just don't check that box and just individually take it. The way I'll prove to me that you did it is you're going to submit screenshots with the 70%. Now you can submit 2 screenshots. So screenshot 1 could be 7245, and then another screenshot that says 86. And as long as both sections are above 70, we'll take the best of. Okay, but that's what you need to do by Friday, 5 p.m., February 15th or 14th, whatever day that was. Make sense? Okay. All right, so get Bloomberg certified. All right, so a couple more things I want to talk about today that's related to why you need to be Bloomberg certified and to give you a sense of what we're going to be doing this semester. So has anybody heard of the VIX index, VIX? All right, so what's the VIX? And why is that important? Hold on, one at a time. Okay, go ahead. Okay, so what does it mean to have more volatility? Yeah.
It's like more uncertainty in the market. Like one day it'll go up, and the Dow goes like 300 points, then next day it'll drop 100.
Yeah. So if you want to see the actual VIX index in Bloomberg, type in VIX. And you can go down here to VIX index. Just click on it. This is the VIX index. And type in GP, which is the graph, the price, and it'll default out 12 months worth of the VIX index. And so it's like buying an option. And the whole idea is, I'm sure you guys did Black-Scholes. And in option pricing theory, the key is to price an option, you actually don't have to know the ROI or IRR of the investment. You actually have to know the standard deviation. And the more standard deviation there is, the more valuable an option is. Because that's the point. Like if something's going to be a certain, I don't need an option for that. I only buy an option when there's uncertainty. Well, that's basically the VIX index. So basically when people are paying a lot for options against the market portfolio, then there's just a lot of uncertainty in the market portfolio. And when the VIX is low, then the market's much more predictable, so people aren't paying a lot for options when the market's predictable. So here's the point. Here's 12 months worth of VIX, and I'm going to compare, and I'm going to add in the S&P 500 index. Here's 12 months of the S&P 500 index. Notice the direct correlation between the spike in the VIX and the drop in stock prices and the craziness of the volatility of the last 90 days. All right, this is not an unrelated concept. And this is what I mean by applied equity. So let's just think about this. So what is going to drive in CAPM, the capital asset pricing model, what is the biggest component that would be influenced by a big change in the VIX index for companies? There's 3 parts of CAPM, capital asset pricing model. Which one do you think is going to be most influenced here? Yeah. It would be the beta, because that's the same idea. You got a lot of volatility, you're going to see high betas. Those are the stocks that are bouncing around a lot more. Okay, because that's how we ascribe risk. If you have more standard deviation or volatility, you're perceived to take more risk. So that's what's going to drive up the betas. If there's more volatility, betas go higher. If betas go higher, what happens to cost of equities? They also go up. So if cash flows are the same and cost of capital is going up, what happens to valuation? Goes down. You just explain what's been happening in the stock price, in the stock markets for the last 90 days. It's exactly what's going on. As a matter of fact, what's making it more troublesome, and I saw this in the Wall Street Journal while I was looking at your assignment, stocks decline as earnings woes raise fears over growth. Translate. What's this mean? What's translation? Yeah.
Stock prices are going down because people are reporting, companies are reporting strong earnings, and so
Yeah, so just stop right there. So if they're not reporting a stronger earnings, what it means is lower cash flows, higher cost of capital because of more volatility. That's even more pressure on valuations. This is what I mean by just tying it back to what we're seeing in the real world. This is where you make these headlines. So when you start thinking about the Bloomberg trading competition that you're in, we need to understand the environment that we're in and how we then have to trade on that. Because we can't just sit in cash. We got to actually make decisions on this environment. So this is one of the things that we could be looking at. So with high VIX, we're in a high volatility environment, and cost of capitals are actually a little bit higher because betas are a little bit higher. So now what do? So let's just say that we get together as a team next week and we say, all right, I want to build a safe harbor portfolio because there's just too much uncertainty and Professor Perfetti won't let us be in cash, but let's at least find the stocks that aren't going to drop like a rock. So I'm going to go to another part of Bloomberg, and it's called EQS. EQS is another very powerful feature in Bloomberg. It stands for the equity, I forget what the Q is, but it's the equity screening tool. And what it literally does is there's 1,055,000 stocks, 50,000 stocks that Bloomberg has in real-time data in the database globally. And you can screen on any of them, okay, worldwide. There's about 71,000 actives. So I'll keep it simple. So I'm going to add my criteria, which you can save these screens, by the way. And I'm going to screen on the S&P 500 index. I'll type in SPX. So this will get my universe down to 505 equities. Now, last time I checked, there were 500 companies in the S&P 500. Why does it say 505? Anybody know? Yes?
Aren't there a couple companies like Google with multiple tickers?
Exactly. So Google has Class A shares, Class C shares. So essentially they're in the index twice. So great answer. This is what I mean by we start to kind of backwards our way into real world issues that we can start to figure out. But these are basically 500 companies. Okay, so let's just answer my question. I want to build a safe harbor portfolio that's going to be less impacted in a high volatility environment. What criteria might I think about? Yeah.
Low beta companies.
Okay, so let's add a criteria for beta, spell right, to be the beta, is that right? To be less than or equal to what? What would you consider low?
4 to 0.6, not usually less than.
So 0.5, pick a middle ground of your range. All right, so 0.5. So before I hit enter, what does a beta of 0.5 mean?
The stock will go, if the market goes like up 100%, then that stock will go up 50%, or it's like impacted with half of the amount the market is.
So if the stock market goes up 1, it goes up 0.5. If the stock market goes down 1, it goes down 0.5. So it's not going up as fast, not going down as fast. Hence the idea of less volatile, more safe harbor. Everybody make sense? So right now in the S&P 500 index, there are somehow I wiped out the S&P 500. 23 companies that meet that criteria. So before I even look at the 23, what else could we throw in as a criteria that also makes us think the stock is more stable and is not going to just fall off the table? Yeah.
The whack being under a certain amount, like a low whack.
All right, you think a low whack. All right, so give me a whack.
7%.
So that also have a WACC less than 7%. That eliminated 4 companies. Besides WACC, what other criteria might give us this? Yeah.
Industry?
Potentially in industry. Somebody actually came up in the last class that was a little bit more obvious, just financial, before we get to industry. We'll go back to industry in a second. They said dividend. Dividend yield. Do you think that matters? Would a high dividend yield stock, dividend paying stock, be a more safe stock? They were arguing it was. So before we get to industry, let's start with dividend. So same thing. Let's look at dividend yield. Dividend yield. So how high a dividend yield do we think we need? And by the way, these are, I'm adding and criteria. You can also do or criteria. We built some pretty complex screens. So how high a dividend yield would we want? 3%? 4%? How about 4? 5 companies. There are 5 companies in the S&P 500 index today that have a dividend yield greater than 4%, they have a cost of capital below 7%, and then have a beta below 0.5. Now, before I show you the answer, because you can go down the bottom and click on See Results, I want to talk to you about the process. So this is how I want you to start doing equity analysis differently than what you might have thought of. Because what a lot of people would have done to the first question, who's my safety stock? They would have just yelled out, I don't know, Southern Company. Let's go buy a utility, right? And what you're doing is you're kind of using your bias to basically try and answer a question and almost justifying an investment that you already wanted to make. One of the things I want us to practice this semester is say, okay, given actual criteria that we know drives value, like what companies meet that criteria, and then let's evaluate them, as opposed to just picking a company and trying to justify our way ourselves into a valuation. Because that's, again, just kind of a different way of thinking about equity research. So let's go ahead and see our results. So if I'm trying to look at a safety portfolio of S&P 500 companies, actually I guessed on that one right, but Southern Company Utility, Ventas, Campbell Soup, Pinnacle West Capital, and Entergy are the 5 companies that meet this. Now, I have no idea who Ventas is, so I will click on this and click on Security Description, Real Estate Investment Trust. So basically we have soup and real estate are the 2 options if you're really worried about volatility. Okay? But again, you can play your way through and do different criteria. Matter of fact, here's another one I was starting to do with the last class. Let's talk about product segments. So if you're paying attention, there's a trade war going on between the US and China. And it's getting kind of fugly, okay? Which is worse than ugly. And I can't repeat the F part, okay? Because we're in pleasant company here. So here's the reason why this matters. Tomorrow, Apple, go to Apple, type in EVT, which is the event calendar. Apple is releasing earnings tomorrow at 5 o'clock is going to be their conference call. This is where the analysts will get the 800 calling number and the PIN to be unmuted on the call. If you're brave, you can try, but they'll probably figure out you're not an analyst and then immediately disconnect you. But nonetheless, Bloomberg will also have a transcript that's done in real time. As soon as that call ends, will be available here as a PDF, searchable PDF. So here's the thing. These are the numbers that they're looking for from Apple, or sorry, this is when Apple's going to release it. This is the Q&A on the call. Now, on the call, you have a group of analysts called the sell side. Does anybody know when I say sell side who I'm talking about? Does anybody know if I say buy side who I'm talking about? Who's the buy side and sell side?
Sell side generally is like investment banks that put out research reports. Buy side is asset managers, hedge funds, etc.
Yeah, that's a good way of differentiating the 2 types of categories. And by the way, the key word is the asset managers, they actually own the stocks. And the sell side don't own the stocks, they make the recommendations. So let me just say, I'm on Apple. I can type in HDS, which is called holders, and this will tell me all of Apple's shareholders, institutional shareholders, from largest to smallest on a scrollable list. So right now, Apple's largest shareholder is Vanguard, which owns 338 million shares, but they've been selling a lot of stocks recently. They own 7% of Apple. Warren Buffett, number 3, 258 million shares. He's been selling a few Apple shares. Wonder why. All right, so let's go back. Scroll down this list. I can go all the way to Joe Perfetti owns 1 share in his testing class. So again, whether or not I own a share of Apple and sell it, nobody cares. Okay? So here's the thing. Because I'm in blue, this is actually a hypothetical portfolio I have for Apple, so don't assume I'm an actual shareholder here. But the point is, Bloomberg's picking up on this stuff. So let's go back. Whether I own a couple shares of Apple or not, and I sell my shares, it's not going to move the stock price. But if BlackRock sells 15 million shares, well, they're kind of setting the stock price. And that's what you're going to quickly learn, is that the buy side is really the institutions, and we've put our money in the hands of the few, and they're the price setters. And they're using the principles that we're talking about this class. But here's the thing. If I work for BlackRock, and let's say I'm running this BlackRock advisory fund, the BlackRock Global Allocation 6 Fund, which by today's standard is, I don't know if it's big or not, it's a $9 billion fund with 534 stocks. And you can actually see across 15 industries. And you can see who this BlackRock fund owns, all the different companies around the world. But the point is, if I'm the portfolio manager, how do I keep track of 534 companies in 15 industries and all their competitors on a daily basis? What's going on? And I'll give you the simple answer. You can't. So that's where the sell side comes in. So the goal of the sell side is not to own the stock, but they are the specialists that work for the banks, the Goldmans, etc., that basically advise the buy side on what they should do. So that's the point. Like if I'm the specialist in Apple, then what I'm telling BlackRock is buy, sell, hold Apple. And the buy, sell, holds are not for me or you, they're for BlackRock. And basically, when they say Goldman says buy and I'm subscribing to Goldman, then the BlackRock fund manager buys. Now, I can always override that determination, like I'm making the final call, but if these people are paying attention, I'm probably going to be listening to what they do. And if they screw me, I'm going to go to someplace else. So this is where the sell side comes in, and they actually don't own your shares, but they're probably more important to your stock. And for Apple, it is these 46 people. And it's going to be Samik Chatterjee of JP Morgan, William Power of Baird. I'm not even going to try and pronounce these names. Catherine Huberty of Morgan Stanley, etc. Matter of fact, JP Morgan, Samik put a buy, Green's buy, and a target price of 220 on Apple on January 28th. What's today? 28. He did it today. So these analysts are updating their targets pre-call. And then they're going to also change them post-call, gearing up for tomorrow's call, because it's going to have a big impact on the marketplace. So that's the point. Right now, wisdom of the crowd, these analysts, Apple's at 156. 23 of them say buy. Buys are worth 5 points. 23 say hold. Holds are worth 3 points. None say sell. Sells are worth 1 point. Apple's a 4 out of 5. Wisdom of the crowd, target stock prices, average them out, you get 176. 12-month stock price target for the analyst is 176. Apple today is at 156. That's 13% upside. And they're down 8% in the last 12 months. So this is not the Apple view even 90 days ago of how Apple was doing. Matter of fact, they're actually not, the analysts aren't thinking that Apple's even going back to where their stock price was 90 days ago. It's just 13% higher than it was today. So they're not predicting the Apple 200 share price we were at in the next 12 months. And that's before tomorrow's call. So what these people really do, and I'm going to keep it short here, EEO, another short code, is they create this, which is called the Earnings Estimate Overview. This is a real-time view into the consensus estimates. I'll switch this to the quarterly numbers. Tomorrow, for the December 31st, 2018 quarter, analysts are looking for $4.17 EPS and $84 billion of revenue. That's the number that they're going to be compared against in the Wall Street Journal. And it comes from Bloomberg, and it comes from the analysts updating and putting their estimates in the Bloomberg because they actually model Apple and upload their spreadsheets. And so the point of the story is, you see all those red lines? The 30-day moving average has been going down. The analysts are constantly now revising their spreadsheets lower because Apple is having problems. What's Apple's problems? I'll sum it up in 2 words. So what is it? Give me the 2 words. And these are going to be, this is going to dominate the call tomorrow. Yeah. China's number 1. They're not selling phones in China. It's the biggest cell phone market in the world, and China is losing market share in the biggest cell phone market in the world. And you might say this is an abnormality, but Samsung 6 years ago was the number 1 phone in China. Last year, 1% market share. Apple's market share is tracking Samsung. It's heading south. And the Chinese local players are dominating, and Apple is not growing. So there's going to be a lot of concern, but all this lack of growth is a lack of growth of nobody's buying phones in China like they used to be from Apple. They're buying from other people at much lower price, which leads to number 2, the price. The price has now gone so high that people are now going to alternative phones. And what are you going to do about it? And the test that Apple's already launched was they brought back the iPhone SE, the low-priced $250 iPhone, which they didn't want to do because nobody was buying the XR. And by the way, look at the XR. They're giving the damn thing away. So this is what's going to dominate the call tomorrow, what's going to happen here. So I go back to this, and if you think about the Bloomberg trading competition, this is your opportunity. But this is just Apple. Let's take a step further, EQS. So what started me down this line of questioning was, I'm going to go back to the S&P 500, and I'm going to think about products or segment revenue. So I'm going to type in revenue, my screening criteria, revenue, geographic segment revenue, Asia Pacific, Asia, where is this? Eastern Asia, Greater China, China. Greater than 5 billion. These are the companies in the S&P 500 that had last quarter more than 5 billion of revenue for China. Actually, what I want is last year. There were 11 companies that sold more than $5 billion worth of stuff to China last year. So if I'm really worried that the trade war is having an impact on companies, which is also going to come up, then these are the other companies that are probably going to be concerning to the analysts just based on their total size. And it's not just Apple. It's also companies like Procter & Gamble, Nike, Boeing. So what I'm saying is 2 opportunities here, because I can't predict the future. This is why you're going to use your guidance. Like maybe the assumption is this is just a Trump abnormality. It's just going to go away. And long term, things are going to go back to normal. And this is still the greatest market potential opportunity in the world today. And these companies are great brands and they're going to be successful. So I ignore the short term and focus on the long term. So these companies are cheap right now and they're a bargain. Or maybe this is really a problem. And maybe this is a long-term trend where they're not going to be as successful in penetrating this market. And we need to be more concerned about these companies. That's what I'm saying. Like, you're going to have to use your own discretion, but using tools in Bloomberg, I want you to make data-informed decisions on why you trade. And this is just a speck of what's available to you. So I'm showing you this because I want you to understand like why I need you to get certified. Like there's a whole world out there that you don't even know that you have access to. It's extraordinarily powerful. And we're going to be using this tool pretty extensively all semester long to try and deal with real world issues. So between now and Wednesday, start a couple things. Number one, if you don't have a login, get one. Start playing around. Number two, you got 2.5 weeks, but why wait? Start on your certification. And number three, if you don't have the book, go find it. Okay? It's either, again, potentially free in the library. I think they have a bunch of copies reserved for students, or you can buy it online, but again, make sure you get the 6th edition. And our first lecture note, which is posted on Elms, lecture 1, actual content we will cover on Wednesday. Okay? See everybody then. Have a good day.
You love it. Yeah, I gotta run, dude. I think that's my next class. In talk. I know,
I thought you were going to say like SPH.